Monthly paying dividend stocks are one of the best things ever when it comes to dividend investing. Now, this is not because they necessarily pay more than a quarterly paying dividend stock or are really any different, but because investors can rely on that monthly dividend coming in every 30 days or so to either use the cash to cover bills on a monthly basis or of course strip that dividend back into more and more shares to allow the dividend compounding snowball to effectively take shape. Now in this video, we're going to go over 3 current monthly paying dividend stocks which all have safe dividends and are all undervalued, which means a massive opportunity as of right now might be right in front of us. Now we're going to go through all this and more right after you please drop a like in this video and subscribe for more content like this in the future. Let's first talk a little bit about what makes a stock's dividend yield so high. A stock's high dividend yield is determined by the relationship between its annual dividend payment and the stock price. So depending on how much the stock pays out on a yearly basis as far as dividend goes and where the stock price is trading, the dividend yield is going to be calculated by dividing the annual dividend per share by the stock price and expressing it out as a percentage. Now there's a few factors that can contribute to a stock having a high dividend yield. Things like dividend policy, earning stability, and of course market conditions can have a considerable effect on a stock's dividend yield. Now before we go any further, it's also important to note that just because a stock has a high dividend yield alone does not necessarily make the stock a good investment. Investors should look deeper into things like a company's financial health, things like growth prospects, and overall investment objectives before jumping in and buying into a high yielding dividend stock just because of the yield. Next, let's talk about dividend safety. So the safety of a stock's dividend depends on various factors that determine the company's ability to sustain and continue to pay dividends over the long time. I'm sure as a dividend investor, you've heard people say, is that dividend safe or is that dividend unsafe? So here are some key considerations to assess a company's safety as far as dividends go. So things like earnings is going to be important when it comes to a stock's dividend safety level. The payout ratio is also going to be an important metric. Cash flow generation, debt levels, industry and market conditions, those are just a few of the things investors should focus on when trying to determine if or if not a stock has a safe or unsafe dividend. So the first safe monthly paying dividend stock that is currently undervalued that we're going to talk about is going to be ticker symbol O, Realty Income. Now, although I'm sure a lot of you are already familiar with the monthly paying dividend company Realty Income, for those of you that aren't, Realty Income is a real estate investment trust or a REIT, and its monthly dividends are supported by the cash flow of over 12,200 real estate properties, primarily owned under long-term net lease agreements with commercial clients. And to date, the company has declared 632 consecutive monthly dividends on its shares of common stock throughout its 54-year operating history. And on top of that, Realty Income has increased the dividend 119 times since the public listing on the NYSE back in 1994. Now, Simply Safe Dividends says that Realty Income's dividend yield is 17% above its 5-year average. The dividend yield currently is at 5.10%. Now, I personally own hundreds and hundreds and hundreds of shares of Realty Income throughout my multiple portfolios, and if I'm going to be completely honest with you, whenever Realty Income seems to be offering a 5% or above dividend yield, it doesn't last long and it's a massive buying opportunity. Simply Safe Dividends is also giving Realty Income an 80 on the safe score, meaning that their dividend is very safe compared to other companies. Now, with Realty Income currently down around 6% year to date, for a stock that normally trades within a pretty tight range for the most part, Realty Income, in my opinion, could be a massive buying opportunity for long-term investors that want to collect that sweet monthly paid dividend that also goes up over time. The next stock that has a safe dividend and also has a monthly frequency as far as dividend payments is going to be ticker symbol ADC or Agree Realty Corporation. Now, Agree Realty Corporation is a publicly traded real estate investment trust that is rethinking retail through the acquisition and development of properties net leased to industry-leading omni-channel retail tenants. And as of December 31st, 2022, the company owned and operated a portfolio of over 1,800 properties located in all of 48 continental states and containing approximately 38.1 million square feet of gross leasable area. Now, Simply Safe Dividends is giving ADC a 70 on the safety score, which is relatively very safe as far as dividend safety. The dividend yield is currently at around 4.47%, which is much higher than the 5-year average. And to be exact, ADC's dividend yield is 19% above its 5-year average, which means in all regard, ADC could be very undervalued right now and could be a big buying opportunity. Now, ADC does pay a monthly dividend of around 24 cents per share per month. And also, just like Realty Income, ADC does have a track record of raising their dividends consistently over the long term. With ADC being down 7.61% year to date, ADC could be a good buying opportunity considering it's pretty close to the low end of the 52-week range. Now, the last monthly paying safe dividend stock that could be undervalued still is going to be ticker symbol MAN or Main for Main Street Capital. Now, Main Street Capital Corporation is a business development company which specializes in equity capital to lower middle market companies. The firm specializes in recapitalization, management buyouts, refinancing, family estate planning, management buyouts. The firm also provides debt capital to middle market companies for acquisitions, management buyouts. Main Street Capital seeks to be the one-stop financing alternative within the lower to middle market capitalization. Now, Simply Safe Dividends is giving Main Street Capital a 62 on the safety score, which to be honest is relatively safe for many other higher yielding monthly paying companies. Now, Main Street Capital is currently offering a 6.82% yield, which makes the current dividend yield around 9% above its 5-year dividend average. Main Street Capital pays around a 23-cent per share per month dividend, which also has been paid consistently over many years. And to make matters even better, Main Street Capital has a history of raising their dividend consistently every few quarters or so. Now, unlike the others, Main Street Capital is actually up year to date 10.2%. So Main Street Capital might not be necessarily super undervalued compared to something like Agree Realty or even Realty Income. But Main Street Capital is still a monthly payer that I've been gathering more and more shares of, for the reason being that juicy monthly dividend, as well as some decent capital appreciation over the long term. So there we have it. Those are 3 different stocks currently that all have what would be considered a safe dividend and are all considerably undervalued right now. And like we said at the beginning of the video, just because a stock has a monthly dividend frequency doesn't necessarily mean it's any better than a stock that has a quarterly frequency, but there are various reasons on why dividend investors, including myself, really enjoy buying into names that do pay out a monthly dividend. But I want to hear what you guys think down below. Which of these 3 names, if any of them, are you currently buying some shares of? And if not these 3, what are some current undervalued monthly paying dividend stocks that we should look into? If you enjoyed this video, make sure to please drop a like in this video and subscribe for more content like this in the future. Thanks as always for stopping by, guys, and I'll see you in the next one.